Good morning, everyone. Okay, let's go over price action real quick. We're coming into the FOMC, and so typically what happens, and there's a lot of volatility around these FOMC events, but levels are still respected. But we've seen massive swings in price during those times. So, if you don't have levels marked out and you don't know how to manage your risk, they can be hard events to trade, but you still have your technical levels. So yesterday, we were coming up into this resistance here, and there was big bearish divergences, and I said, hey, this is a reasonable short, pretty low risk. You can just say, hey, are we going to reject from this local resistance back into the lows of the range? And I took a short, not accidentally, I made a trader error and closed it early, and then just ended up reopening it. So we ended up getting a rejection. I was doing a members live stream around the new daily candle. And I said again during that members live stream, hey, this is a reasonable short because we're coming back up and testing resistance again with bearish CVD divergences. So, pretty much every rally here has been shortable. And so then price moved back down into the lows of the range, and we had this little swing failure. And so I traded this swing failure up, and we had this rally and then a back test of a local 618. I'll just point out too, you have this descending trend line, and here as well, this was a local golden pocket. So local golden pocket, rejection with bearish divergences, rejection with bearish divergences. So, you have a key level, bearish divergences. It's certainly tradable. But anyway, so this swing failure, we had a nice initial reaction, and I took the trade off the initial reaction, a small position, and compounded on this local retracement because we had a local bullish divergence. Somebody in the Discord, one of the members, was asking, hey, they took profits around here. Is that too early? And I said, no, that's smart. That's going to add up, right? Because even from this pivot, it's a 2.3% move. And you had this local descending channel, middle of the channel, a little swing failure of these highs. So I had to go to sleep. So I just took profit, set my stop loss to entry, obviously hoping the position carries on while still carrying some of my shorts, but took profits from them. And then obviously woke up to having been stopped out on the rest of my position at entry. Into the New York Open this morning, we're opening into resistance again. So you have from this pivot high, the golden pocket, this descending trend line. There wasn't bearish divergences, but we were close to forming them, and there's definitely absorption. So we have this descending trend line ultimately that we're flirting with. I'm not really shorting anything here because I still have some of my shorts from higher. And so I'm happy just to let price play out. If I get stopped out of those at entry, that's fine. I can look for shorts up higher. But ultimately, I'm looking at this as a range. But we have much heavier bearish divergences within this downtrend than we do bullish. So that being said, shorts probably are preferable. We have a big level up into the middle of the channel here. And you could certainly be pulling a golden pocket from this high. So I'd say this is a big resistance region that might offer some nice shorts. Got to take profits. I think take profit one aggressively. But we do have some ideas of going lower if we can hold some of this resistance. Maybe swing failure of these lows, and then there's a crab harmonic target down here. So if we get some strength coming in, you could wait for this low to be reclaimed and take a smaller position, or if you can read a reaction, you might take a bigger position there. Of course, I'm not suggesting what you should do. I'm just saying technically that's what you could do. But yeah, for now, I'm imagining we'll get some volatility later this afternoon. I think it's probably just best to trade local price action, right? You have lots of local levels being respected. You can get in, get a take profit. If the position carries on, great. If not, that's fine too. On Ethereum yesterday, shorted this pivot high, which was really nice. So we came back. So I want to go over actually how I traded Ethereum because it's kind of an important way of demonstrating how you can just change the direction that you're trading price. So we had a couple things going here. So we had two channels, and we had this back test of the point of control. And so on this back test of the point of control, I traded long. We got about a 1.5% bounce. But then we lost it, and I just cut my position here. And then I said, if we get a back test of the point of control, we've lost this ascending price action. So here you can see I'm taking a relatively small stop loss, about 1%. If we lose this and we back test the point of control as resistance, which is also going to be a local golden pocket, nice confluence there, then I'd be interested in a short. So we got moved down, we back tested it, I opened a short here, and we got this big rejection. So that was a really nice trade. I took probably close to 75% of my position down at these lows. But same thing, right? We're kind of reclaiming this range. The price action on Ethereum isn't quite the same as on Bitcoin, but you'd want to use the same principles, right? Where you're pulling all your key levels across this price action. We're at the middle of the range. We have a golden pocket up here. ETH really likes the 786. So the 786 and the point of control come in at the same place. So that's going to be heavy resistance. And to the downside, we have local retracements. This actually would be relatively nice back testing this level into the golden pocket. If we pushed a little higher into this golden pocket, this would actually be a nice possible swing failure into a back test, back up into the point of control, something like that. But just waiting for key levels, set alerts, and see what price is doing, what order flow is doing at the key level. That's how I'd approach it. I guess I also took I took a kind of more of a swing long position on FTM last night. I guess I still have the setup here. So as we came down to test this level, I took a small position, which is about, it's going to be about 1/10 of my account size into a possible swing position. And so we obviously came down, almost tested the 786 on this descending channel. We're kind of breaking out of it now. So we'll see how that position plays out. Just a small alt position at support, can always add to it if there's strength. So yeah, that's how I'm approaching the chart. This would be kind of nice to hit if these bigger bearish divergences play out. But we'll see what happens. Just waiting for key levels, looking to get into some entries where I'm likely to get a reaction, a bounce, and try to read that in order flow, get a take profit, and then just let price play out. And one thing I'll say is there's we have a trader psychology channel, and people talk about how, and this is especially for newer traders, how they get into these situations where, and this is something that every trader will experience, where they let maybe trades run against them too far when they know they should stop them out because they're hoping for a reversal, maybe hoping to get out at entry, or they're in great positions and they just close them for some reason. And when they should leave them open, they look back and say, why did I close? I had a great short. Why did I close that short? And that's really normal for a new trader to go through that stuff, because ultimately most of your decisions are going to be made emotionally. And I pointed out in the members group, when I closed this short early, everything was going for the short, and I reopened it not too far below. But everything was going for the short, and it was a trader error to close this. I really make decisions like that because I'm happy to have my short, I have my invalidation, and I just let the trade play out. If I get stopped out, I get stopped out, not a big deal. But so I pointed out, I said, hey, even when I closed it, I said, I'm closing this on a gut feeling. FYI, trading off your gut feelings doesn't usually go well. And it's not the same as taking a losing trade, just closing a position early, but you don't want to get in the habit of making those kinds of errors. And then not shortly after I closed it, we got a more defined rejection. and I said, hey, yeah, this was not. There's nothing to learn from me closing this. You shouldn't be trading off gut decisions. You should be trading off data. And so for me, I can open a short a little lower, a bit of a smaller position, and move on. But I even need to make a note of that. Why did I close that? And I know why I closed it, but I also know it wasn't the most probabilistic idea that we would get a push up here through massive bearish divergences. So, it was just kind of one of those things that pops into your head like, hey, I think we're going to push higher because I've seen something like this, or this a few times over the last couple of years. I may close this position. But then you're making a decision based off some experience you had that's a very low probability event, which I think a lot of traders fall into that. They maybe have just some kind of emotional baggage in their thought process where something happened to them, where they took a position and then they're starting to see something that reminds them of something where they got stopped out of a position and they close it, or get reminded of a time where they had some profits and the position reversed against them and stopped them out. In situations like that, maybe the best thing you can do is just take some profit off a position, maybe not close it completely. But ideally, what you should be doing is, if you have a position like this, let it run to its targets. Take some profits off the position, but you don't watch the 5-minute chart or the 1-minute chart trying to guess what price is going to do. Just let the trade play out, because you need this risk reward to skew this way, and the only way that happens is if you can let a position play out. Because if you don't, you're going to constantly be in situations where you're risking more than you're going to make if you're right, because you see an uptick in price and you close your position and you're like, I'll just get back in when we come back up here, and then price dumps, and then maybe you get flipped bullish in your psychology and you start longing this, and you're just in a weird space. So what I like to do is take shorts at resistance, longs at support, shorts at resistance, and just let the trades play out. And if I see something that's data driven that could get me out of a position with either more profits or before I take a loss, then I will make those decisions. But it's not about guessing what's going to happen. There's no way to know what's going to happen, but there are some things you can look at that put the probabilities in your favor. So anyways, hope that's helpful for you guys. I just wanted to do a quick update and share my thoughts. But yeah, this harmonic pattern, I'll just kind of put it back on the chart here. Oops, it looks something like this. Although it's getting a little wonky in terms of like the length of all of these sections. Still may be possible. It's a level I'm going to be watching anyways. But yeah, let's just see. Ultimately, more bearish. Bearish market structure, bearish order flow. Lower is most likely. Doesn't mean we'll go lower, but that's what's most likely. All right. Talk to you guys later.